Hey, you all know that I am Aurorah Dey, and this is the Secured Entrepreneur Movement. It is a whopping 6:15 a.m., but you know that Miss Aurorah is already ready to go, right? Okay, so I'm going to answer this question. Several of you now have emailed inquiring about this particular tax deferral strategy, okay? The very first person to make an inquiry came here on YouTube, John M., and I told him that I would do a video about it, and then many of you started emailing because you went to some real estate conference or seminar or something, and the presenter started, telling you that you could use this strategy, but there was no clarity. So what did you do? You started asking Miss Aurorah. Okay, so what's happening is this. This is a 1031 tax deferral exchange, okay, for the real estate investor who has acquired a property. Okay, you acquired a property. Now you want to sell that property. However, the profits from that property is considered a capital gain. Okay, and you would pay capital gain taxes. Okay, now instead of giving the Internal Revenue Service this capital gain, okay, your profit, you now exchange this property for a more lucrative property. Okay. You use the money that you would have given the Internal Revenue Service as a down payment on the new, more lucrative property. Now, this is how it goes. There is a short-term capital gain tax. And what that means is that you had this property less than a year, and now you want to sell it. The tax rate on that, you've got, and this, once again, it's depending on your income. This is based on your income. So you've got 10%, 12%, 22%, 24%, and so on. I think it goes up to 37% on the short-term capital gain tax, okay? Then you've got long-term capital gain. And that means that you acquired the property and you held the property for more than a year, and now you want to sell the property. And those rates are 0%, 15%, and 20%, okay? Based on your income, all right? So, keyword income. Now, what's happening is this. You're saying, I want to make more money. It's time for me to get off of this property. Maybe I'm not really making, as much money as I thought. I see some other properties that would be way more lucrative, but I need more money. I need a larger down payment to acquire this property. So I just don't sell the property. I do a 1031 tax deferral exchange, giving me more money for a down payment to now purchase the property that I truly do want. Okay, so that is the exchange. Okay, hopefully I've brought some clarity to all of you who have been asking about that, because a lot of you are buying the real estate in your own name, you're getting these loans in your own name, and you know, when you're selling the properties, you're not exchanging for another property, you're just selling the property, and now you're all upset about the fact that you paid, you know, as much tax as you paid. But again, that had to do with your income. All right, so for all of you who are doing these exchanges, make sure you have a reputable CPA who is knowledgeable about these particular 1031 tax deferral exchanges. All right, that's all I wanted to share with the Secured Entrepreneur community this morning. I hope you all are having an awesome day. You know that you can find me at www.aurorahdayconsulting.com. Come on over to Facebook, Aurorah Dey Consulting, and give us a like. And what did I say? If you are not with us in the Go From Sole Proprietor to CEO Facebook group, you need to click the link down below. Come on over and make it happen. Why? Because the teachings that I'm doing over there, you're not going to find here on YouTube. Okay? So, until next time, ta-ta.